Santa Claus is coming. Baba. All right, another viewer request. Want to know, is it bottoming? Is it bottoming? Slowing down. That's stage 4. I did a podcast way back in March, and I was stating I was ending at stage 2. March. What about here? I was entering stage 3, and now definite stage 4. Look, when you see a stage 4 on the monthly candle chart, when you see a monthly defined support breaking down, closing below it, when you see that 12-month moving average starting to go downwards, follow that price action below, well, that is the higher prevailing downtrend, higher prevailing trends direction. And if it's in the downtrend, well, pullbacks on the smaller time frames, you got to see those as pullbacks and usually not reversals. But let's just start by seeing what is happening. And if I'd be doing just my regular chart trading framework, top to bottom, even the greediest of the targets, if I take the highest of the monthly defined resistance and the lowest of the monthly defined support, do my measured move, add it to breakdown line, that target has already been reached. So the way I would do it with my chart trading framework, I just have to wait until maybe a few more candles, pull back, another sideways move, and then either play upwards or continuation move downwards, measure move here, add it to breakdown line, and giving me a target. Maybe that's going to hit previous resistance turn support a while right here. And that's where the next important resistance support is right here. Right here at the 111 area, and then after that just a little bit lower right here at this takeoff pattern right here at the 105 level, 106. Until then, no man's land, not much support along the way. This could easily, you could maybe have a pullback, but it'd be crazy, a pullback up to the breakout line, hit that 12-month moving average, and then go downwards and test the slower support right here, 111, and then down here 105, and then you'd have to wait what's going to happen there. But until then, no man's land. My monthly defined target is reached. But there's the advantage if you're doing it Stan Weinstein stage analysis. You're not doing measured moves. I know Stan does the swing rule, but you could ride along a stage as long as it permits you. You won't get in at the beginning. You won't get in at the end, but you'll be able to ride it for a long time. Just as we had a breakout here, beautiful stage 2 breakout. You see that volume right here, twice average or even more than the previous 4 weeks. Breakout candle outperforming the SPX. So you had initial burst right here, and then after that you get a pullback close towards the breakout line, some price action below 3-week average, underperforming the SPX. So probably shook out a lot of people here. But after that, you had a continuation. Even right here, off this base right here, I had a continuation. Nice, good risk to reward. 3-week average protecting you. Let's look at it right here. Nice volume, twice average of the previous 4 weeks right here. And off you went after that. And then you would have rode this stage 2, never challenging 30-week moving average until you started getting here. And when the price action starts hugging the 30-week average, beware a close below, and then you would have been out right here. You could also have been out 1, 2, 3, 4 trend line violation, 30-week violation, pullbacks. How does the sell stop work? Remember, pullbacks. Move your sell stop below. Pullbacks, price action goes back close to previous high. Move sell stop below the trader's way. And if that is violated, then you're out. And the trader's way, if you do Stan Weinstein, then if you have a close below 30-week average, you're out. These are all signs. And other frameworks probably have some other signs. The 40-week EMA violated, etc. 200-day moving average violated. Don't be finicky about those exact numbers. It's all about trends. It's all about trends slowing down and all of these type of signs, trend line violations, pullbacks below previous lows. See, the lows are higher lows, still an uptrend. And then when you start getting lows, lower lows, then that's a good sign that you're not an uptrend anymore. You're going to stagnate. You need some time to gyrate, market digest, sideways move. And then after that, you have to reevaluate. Okay, Pat. All right, where we are today. Okay, so on the monthly candle chart, we had that breakdown. On the weekly, we had multiple breakdowns. Look at that crescendo volume, not nice. Multiple breakdowns. Here's the my weekly defined breakdown line. Look at that weight of evidence, guys. It's all over the place. Crescendo. See on there's red volume here. Down, red. Big red candles here. Underperforming the SPX since here. So since here, right here, that's the beginning of the stage 4. But we're not going to short it quite there yet, right? Because you want that 30-week average to start angling way more downwards. You want that pressure. You want any chances of a pullback to have that weight of the 30-week average bring it down. So pullbacks would actually be good chances to short. You still have that Ichimoku cloud defined support. So until we're past that, it's a patience game. You really want to make sure that you're out of there in case that pulls you back up and whipsaws you out of a sell stop that you would have too close. But after that, once you're out, it's free fall. So now we're below the 30-week, below the Ichimoku cloud right here. So another sideways pattern. And down we go right here. So now we're out of the cloud. We're below that 30-week moving average. Everything's going downwards here. What could happen here? We could have a pullback close to this breakdown line and then maybe continue downwards. If that doesn't hold, the pullback could go a little bit higher to this more important breakdown line, and then it could break down. So here you'd probably maybe have a chance to enter right here. Right here, another better risk reward entry right here. Other stuff you want to notice is if ever there's those pullbacks, you want it to be on contracting volume. And that's going to make you increase your chances of having a successful continuation short on the pullback. And remember that you're going to, for the SPX, if you have the pullback, you never want to short when the Mansfield relative strength is inclining. So what you do, you wait. And when the price action starts going back down, usually you'll start underperforming the SPX once again, and that's when you have that V shape that's when you know that the correction has stopped, the pullback has stopped, and you're going to continue resuming that downtrend. So right now it's kind of hard. I wouldn't enter right here. I'd really wait for a pullback and to see if that 158 level is going to hold, 159, and if it sinks upwards, it bounces through that, pierces that, and maybe hits that 166, 177 level. And here you'd have a great risk reward entry right here. But you definite downtrend. I don't see why it would stop right now, why it's going to pull back anytime soon. The next time we have some really good support is that 110 level right here. As we saw on the monthly. I'm going to head back to the monthly. Oh, man. All these lines. Patrick, there's too many scribbles. Right here. This is my next line of support right here. The 101 106 level about. Yeah, 106, 107. So until then, any pullbacks, observe. If they pull back on contracting volume, then when you get close to those moving averages on those pullbacks, it's just another occasion to short, guys. Yeah. All right, that's it for Baba. And until we see, until the chart morphs and I see some different behavior, still stage 4. Going down. All right, guys. Thanks. And don't forget to subscribe.